More on this breaking development, we want to bring in Bloomberg contributor Danny Blanchflower. He is an advisor to the Boston Fed, a professor of economics at Dartmouth, and also former member of the Bank of England's Monetary Policy Committee. And he joins us from Exeter, England. Danny,
hello.
Good morning. Thanks for joining us.
Sure.
So this news, apparently, that Silvio Berlusconi, unconfirmed reports so far that he may step down. This is something you say was in the making for a couple of weeks now, or at least a couple of days.
Well, certainly there have been rumours in Europe that that was part of the deal. A press conference the other day, an English reporter asked Sarkozy whether that was part of the deal, and Sarkozy told him he was from a little island and he didn't understand about European politics, but I guess he did. So the rumours here have been part of the deal to sort out Italy, and part of the package deal is that Berlusconi has to go. But I don't know that that's going to achieve much. You and I have been watching the bond yields this morning, and the markets are really not very confident that this can all be fixed. And I suspect even with Berlusconi going, Italy's in recession, it's going to continue in recession, and it's going to worsen. So we have a big problem.
Right, and I'm looking at the Italian 10-year bond yield right now, and it's paired some of its advance, still at 6.533%,
right.
So still above that 6.5%
right.
level. If this is something that they've been working on for a couple of days, that would mean that there's someone ready to replace him. Does it make any difference who replaces Berlusconi at this point?
No, I don't think it really does. I mean, the issue is, what can the Italian economy do? I mean, Berlusconi has, the stories about him and his ability to lead are obviously a problem. But the issue is, what can the Italian economy do, and how can it deal with this huge amount of debt? And essentially, it's in recession, and then you say we've got to impose lots of austerity on it. Same with France. And then you're going to push it further into recession and make it further unable to deal with its debt issues. So we have a big problem. Same issue in Greece. Impose austerity, no growth, and we have a big problem. Same in Britain. You have austerity packages there. The UK is now in the deepest recession in the last 100 years. So the politicians keep shouting austerity, but they forget about growth. And
you could say the same goes for France, too, because they're going to unveil a new package of austerity measures as well later today.
Yeah, exactly. I mean, what we've seen in the last week are the purchasing manager indices relating to France are very weak, suggesting actually it's already in recession. European unemployment was bad, but actually the worst was in France, where unemployment jumped by 0.3%. So France is in recession already, and now they're going to announce austerity. Presumably this will impact bond yields. So these European politicians have forgotten you just impose austerity on countries that can't depreciate their currency, and you put them further into recession, which means you have to have more cuts, which puts them further into recession. Right. This just looks like madness.
Well, it's not just the European politicians, right? Because up until the ECB replaced its governor, Jean-Claude Trichet was very much of the mindset that you don't get any aid unless you cut spending.
Well, that and also the fact that they raised rates twice, which made the cost of borrowing higher. Fortunately, they lowered rates surprisingly to many people this week, but the calls are really, you have a central bank that needs to play the role of a central bank and purchase bonds. And the question is, are they going to do that? Or another fix would be to allow European-wide bonds for the central bank to behave like a central bank, and the Germans are preventing that. So it just looks like non-functioning on the fiscal front, non-functioning on the monetary front, and here we go again. Down and down and down. Yet,
when we look at the market reaction right now, as I mentioned, the Italian 10-year yield pairing some of its gains, stocks pairing some of their losses, people seem to be responding positively to news that Berlusconi could be stepping down. Is that misguided?
Well, I mean, what we've seen, we saw both in July and last week, we saw an initial euphoria from the markets who thought that this was really news. And then a day later, people say, well, that probably isn't news, because once he's gone, what's the difference? What else are we going to be able to do? Because the fundamental weaknesses are in the marketplace itself, in the economy itself. So maybe we'll see governments coming and stepping in. But look at Belgium. Belgium actually hasn't been able to form a government for the last year. So governments, in some sense, are obviously part of the issue, but the credibility of the whole of the euro project, if you like, the failure of the central bank, and essentially the European area is now in recession before this austerity starts. So one down, all down.
what it kind of means for investors is they need to now be political scientists as well as those who can evaluate what's going on with the economy and with earnings as well. Everyone's following parliamentary votes in Greece and in Italy carefully.
Well, they are, but I think the answer is that they're not terribly impressed by them. We saw the equity markets in this sort of burst of euphoria, but we watched the bond markets of Bloomberg a lot, and what we've seen is the bond markets have not been impressed. They weren't impressed last week at the package deal, and they're not really impressed today. Yes, maybe they've moved a little bit because they think Berlusconi may go, but I bet that doesn't go very far, and it doesn't stop this, if you, in some sense, a growing panic.
Right, right. Okay, well, thank you so much, Danny Blanchflower. Even though bond investors don't appear to be impressed, German stocks are rising, so some equity investors are a little bit cheered by reports, unconfirmed reports, once again, that Silvio Berlusconi is stepping down as prime minister within hours.